Welcome back to Just Make Money. Just Make Money is a platform where you get a very professional outlook about any financial market, any financial instrument which is listed anywhere in the world, in any of the exchanges, direct from the trading desk. You do not have to do anything, you just have to sit and listen to our analysis. Even if you are having some other view or analysis of some other analyst, you can compare that with ours and take a view and take a call. So, our request is that listen to us on regular basis so that you have a continuity, you know how the market is moving and where the market is going to move next. Because we present our videos in such a way, we time it in such a way that there is a proper link. There's a proper link in the direction of the market, that which way the market is going to move. Once it has completed one direction, then we present another video where we tell you about how it's going to reverse or how it's going to fall further if it is going down. So let's sit and just listen to what our analysis is about foreign currency market, Forex market this week. But before we do that, let me give you a very brief introduction about myself. My name is Sumeet Kumar. I'm a SEBI registered research analyst. I have a 25 years of experience in international financial markets. I'm advisors to HNIs, NRIs, and corporates for various needs. Now, those who have been already associated with us, they must have seen this price chart. This is a price chart of US dollar index. Last time we had told you that it was going to touch around 115, which it did. We also told you that it will congest and come back, which it did. And we told you that it is going to come around, say, 108. You can see it from the graph that there is an indication of 108 at the lower side of the channel. Now, as time passes by, this level keeps on going higher. You can see it from the line drawn. Something which is at 108 1 week ago, it will become, say, 108.50 or 109 after 7 days or 10 days. So now let me give you another price chart, the latest price chart of dollar index. This is the one. Now this is the one where you find that after having touched around 109.50 at the lower level of the trend line, after having touched it, it has bounced, or it is trying to bounce, which it should. Now today, that is 10th of November 2022, is a day when inflation data is going to come out of the US. So this will be important. Expectations are that inflation is going to be very rigid, very stubborn, people say. And it is going to stick there for quite some time. There are various reasons for it. So US dollar is going to get supported. Our view is also the same. And it is a great possibility that US dollar can move upward unidirectionally in just one direction and very fast. From here on, you may find that US dollar keeps on moving up in uptrend in a singular, in a very fast manner. There is a great deal of possibility. Now, what impact is going to have on other currencies, especially the ones which are traded as a pair with INR, that is Indian rupee. So let's begin with US dollar INR. Now this is a previous price chart where we had told to you that's going to touch around 83 USD INR, and after that it should come back around 81. We had given a call whether it's going to go to, say, 84 or 81, and we had indicated that since dollar is resting for a while, rupee will also get stronger. And we had said that it should touch around 81, which it did yesterday evening, 81.2022. That was the base price which INR had touched yesterday with vis-a-vis US dollar. Now, what it looks like? To us, it looks like that it should weaken, but it will not weaken, rupee will not weaken a lot, but it will weaken because there is a call. There are two reasons for this. There is a call from the government agencies, government departments, that they should let rupee weaken further. Now, that is one part. How much RBI is going to agree to this? We do not know. But since dollar is going to get stronger and stronger very fast, I will suggest that we should be looking for a weaker rupee. It can weaken further. How much? That we will see with passage of time. Now, what it looks like from here? Looks like that for this month, 81 should be the base. As of now, 81 should be the base plus or minus 25 paisa. It should be the base, and those who are importers, they should be hedging their bets, hedging their exposures. Those who are investors or traders, they should buy dollars at these levels. And exporters, they should hedge their positions here using options, not futures, not forward. This is what should be done with the US dollar INR. Immediate target for rupee versus US dollar, it can be 82.50. Immediate target. That is, say, in a week's time, maybe in a week's time. So that is where it looks like to be going. Now, let's go for Euro INR. Now, this is the price chart of Euro INR. Euro INR is finding it very difficult to go beyond 82. Time and again it has tried to breach 82. This is a weekly price chart, and time and again it has tried to breach 82 levels, but it is not able to do it. It is just not able to do it. This is a previous week chart. I will give you the latest one. Now, this is the latest one where you see that it has tried many a times to go beyond 82.50, 82.25, or maybe say a base price of 82, but it has not. It has time again come down. It has come down because of strength in US dollar. Now, what should be done? And what is the reason? Reason can be, the fundamental reasons are that US dollar is getting stronger. There is a chance of recession in Europe because of various factors. Factors that is high inflation, factors of higher interest rates, and factors of war that is going on in Europe inside. So, what should be done? As an exporter, you should be hedging using forwards and futures. Don't use options. Options are very liquid and very costly. Use forwards and futures to hedge your exposure. Importers can wait. For importers, there is no hurry. They can wait. They can wait till, say, the levels of 78 or 77, where they will get a chance to buy in futures or using forwards to hedge their positions. And what should traders do? My suggestion is that traders should be out of euro and pound sterling. They should be moving into, if they want to trade or they want to, say, invest, they should be moving into US dollar INR. Because these two currencies, euro and pound, they are very fundamentally, I should say, they are very uncertain. And it will not be right for a trader to hold a position overnight. Intraday is fine, but you should not be holding a position overnight in euro and pound sterling. So, exporter should hedge using forward and futures, importers should wait. They can wait definitely. Now let's go to GBP INR. This was the previous chart where we see that it has become very volatile because of some political scenarios in the UK, and because of the decisions, economic decisions taken by the previous government. It had become very volatile going out of the channel. It has come back again within the channel. Now let's see the latest position. Latest position is this, that after having touched 95, it is around say 92, and this is where it should remain, somewhere between say 94 on the upper side and say 88 on the lower side. So this is where it should remain, because the market is going to see the impact of the decisions which is going to be taken by the latest government. Now what should be done? As an exporter, you should be hedging it. Hedging it using options? No, not using options. You should be hedging it using futures and forwards. Use futures and forwards in pound sterling and euro. Don't use options. They are very illiquid and they are very costly also. So large exposures will be difficult to hedge using options, especially through the exchanges. Traders should avoid these currencies, as I told you before. Now, importer, they can partially take their positions at these levels. Say 25%, 50% exposures they have, they can book using forwards or futures. And 100% they can go around say 90 or 89 levels. They can book their positions over there using futures and forwards. Pound sterling is going to be somewhat stable, more stable than euro. And euro should be volatile, as I told you before. It should be moving very fast either sides. And USDINR, it will be definitely getting on the upper trend, on the upside. This should be the base around 81, 81.25 should be the base for USDINR. So all in all, what we see is that dollar should be getting stronger and other currencies should be moving in the other direction. That is, they should be getting weaker. Now, what pair we are trading in, that will depend upon what position or what strategy we should apply. But for these international currencies, three international currencies vis-a-vis INR, I have just discussed, and this is what should be the strategy. This was the brief of what it looks like and what should be done at this frame of time, that is in a week or so. If you have any comment or any suggestion, you must give it to us so that we use those comments to improve our presentation to you so that you get benefited. If you like our video, please share it with people. Subscribe it, because it's going to be on a regular basis, and it is very important that we are in touch with our presentations. Everybody is in touch with our presentations on a regular basis. The reason is that there is a continuity. There is a continuity in the thought. And we presented to you the videos after a particular trend has played out. We had talked about USDINR playing to 81, which it did. Now, this video, latest video that we are presenting to you is for the uptrend of dollar. That is moving towards again 82.50 USDINR. So take care and be in touch. Thank you.